Do you continually blow up your trading accounts and consistently lose money from your forex trading? Are you sick and tired of blowing up accounts, consistently losing money, and not being able to create a sustainable long-term return from your forex trading? Well, today we're going to be discussing some simple steps and some simple tools that you can use to stop the bleeding, to stop losing money, and to help you become a consistently profitable forex trader. What is going on, guys? My name's Thomas, and today we're going to be discussing some simple steps and tools that you can use to cut the bleeding and stop blowing your trading accounts. Now, the first step to help you from blowing up your trading accounts is to not feel ashamed. Don't feel like you're alone when it comes to blowing up trading accounts. 90% of traders lose 90% of their funds within the first 90 days. So you're not alone when it comes to blowing up your trading accounts. I know personally I've blown up multiple accounts throughout my trading career, and I know I'm not the only one to do so. The numbers are against you, and the numbers are against retail traders. 65% of all retail traders will never ever make money. You think about the amount of people that you know or have dabbled in trying to trade. There's a significant amount of people which just never ever make any money from their forex trading. And this is why you shouldn't be too concerned if you are blowing up accounts, particularly in the start of your journey. And there's some simple steps that we can do to negate and minimize the amount of money that you're losing, to cut the bleeding and to stop you from blowing up your trading accounts. And there's a few simple things that you just need to look after in your trading. Things like risk management and understanding how much to risk on every trade. Things like understanding your trading psychology and how to take control of your emotions. And most importantly, having a trading plan and sticking to the rules and guidelines within that plan. So the first step to stop the bleeding and to be able to stop blowing your trading accounts is understand risk management. Now, risk management is one of the most essential parts of being a successful trader. And what that means is understanding exactly how much risk you're putting on each individual trade. And what I find with most beginner traders is they start off with a small amount of capital, say $100 or $1,000, and they see and are influenced by particular traders out there which show off the flashy cars and beautiful homes, and they think that they can turn this $100 or $1,000 into a multi-million dollar trading portfolio. Now, this isn't the case. It's unsustainable, and it's not the correct way you should be looking at attacking the markets. Sure, if you go on a hot streak at the start and you're taking winning trade after winning trade, I'm sure you can turn that $100 or $1,000 into a substantial amount of money. But if you're taking 20% risk on every trade, it only takes 5 losing trades in a row for you to completely blow that account. And that's why risk management is so important. Beginner traders risk too much on individual trades, and what ends up resulting in this is blowing up their accounts way too quick. And a good example of this is if you're at the blackjack table. If you win your first hand, you double up, you continue to put that profit back on the hand. Sure, if you go on a winning streak, that profit's going to multiply and double in an extremely quick amount of time. But what happens when you take that losing hand? Everything goes away. You need to make sure you protect your profits, and most importantly, protect the capital that you're actually trading. And this is why I always recommend taking somewhere between 1% and 3% risk on each individual trade. You should never be taking 10%, 20% of your trading capital and taking that on an individual trade. Always stick between 1% to 3%. And as an example, if you're using 2% risk on each individual trade, which most of my trades that I take, I do, you'll need 50 losing trades in a row to actually blow that account. Now, you're never going to take 50 losing trades in a row if you've got the right trading plan in place. This is why I highly recommend lowering your risk, understanding how to correctly manage your money, and reduce your position sizing to between 1% and 3% for each individual trade. Your mindset needs to shift from thinking about how much money you can make to how to preserve your capital and how much money I can avoid losing. Now, you may think that's a pretty pessimistic thing to say, but you shouldn't think of yourself as a trader. What you should think of yourself as is a risk manager. You should be managing the amount of risk that you take, and that way you can make the most and multiply the opportunities that do come up in your favor. It's like the casino. It's the best way to compare a successful trader is being the casino. If you're trading with 10, 20% risk on each trade, you're really just gambling your money away. And what you need to think about is being on the other side of the table. Be the casino rather than the gambler. Have the odds in your favor. Just like in the example before, the casino will let you double down your chips and continue to put more and more money on each individual hand, but they know that their odds are in their favor, and after a while, they're going to bust and they're going to be able to receive their profits. And that's how you need to think about your trading. Stop gambling and start being the casino and focus about having the odds in your favor and minimizing the risk that you have on the table. And following on to this, the second step is to set realistic goals. Have realistic goals that you set in regards to your profit targets and what you're really trying to achieve from your trading. You don't need to be making hundreds of percent each month to create a sustainable long-term result from your trading. 3 to 4% a month is a fantastic result for any forex trader. If you're returning 3% a month, that's a 42% return compounded annually. That's a fantastic return. If you've got a $10,000 account, or you're using, say, an FTMO or a prop trader to be able to trade more capital, if you're trading at a 42% compounded return a year, you need 2 and a bit years and you've already doubled your money. And that's a better return that you're going to be able to achieve from most investments. So stop listening to the Insta trader that tells you how you can make 10, 20, 30% a month, and just focus on making between 3 and 4% every month. And I guarantee you're going to have sustainable profits in the long run. Now, the third step to help you stop blowing trading accounts is to understand your trading psychology. Keeping your emotions in check is probably the hardest part that it comes to forex trading. Being able to take a trade and not being scared to pull the trigger after you've just had 3 or 4 losers in a row can be extremely difficult, as can taking 4 or 5 winning trades in a row and not getting ahead of yourself. Trading on tilt is never going to end up in a great result for you. You need to be able to control your emotions, understand your trading psychology, and follow your trading plan. Now, don't let emotions get in the way of good trades, and certainly don't let your emotions get you involved in bad trades. Now, one of the best ways to be able to control your emotions and keep your emotions in check is our step number 4, which is have a trading plan. Now, a trading plan is basically just a business plan that involves all the rules and barriers and boundaries that you have to stick within for your trading. Your trading plan will outline anything from where to get involved, what pairs to trade, what rules are required to happen before you enter your trades, how to correctly manage your trades and your positions once you're entered, and where to stop yourself out of trades. Now, the saying is, by failing the plan, you plan to fail. Write out a trading plan about exactly how to get involved into your particular trading strategies and systems, how to exit trading strategies and systems, and how to correctly manage your money. And I like to think of it as writing it in a way that someone who has absolutely no idea about how to trade could pick up your trading plan, read your trading plan, and exactly be able to execute trades the same way that you would. And lastly, step number 5 is journal your trades. Now, journaling may not be the funnest part of when it comes to trading, but it's absolutely essential to be able to keep yourself accountable in following your rules and looking after and controlling your emotions. Now, if you've ever gambled before, I'm sure if you journaled each and every bet that you've taken, you definitely would have a different outlook on gambling next time you go and place a bet. It's all about keeping yourself accountable, making sure that the trades you're involved in follow and tick all the boxes of your trading plan, and ensuring that when you involve yourself in those trades, you understand exactly how you felt and that you weren't affected during that trade by your emotions. Because if you aren't following your plan and you aren't taking control of your emotions, then you really are just gambling. And trading isn't gambling, so it shouldn't be treated the same way. Write down exactly each trade you get involved in, the time, the trading strategy, where you got in, where you got out, the profit and loss for that one, exactly how you felt during that trade. And that way you can review it each week or each month and understand if there's anything that occurred which resulted in you involving yourself in trades that you probably shouldn't have been in. And create a strategy and a plan that ensures that you don't continue to involve yourself in the exact same trades in the future. And the easiest way to create a trading journal is just through a spreadsheet. Bring up an Excel spreadsheet and write these data down into a spreadsheet. Otherwise, you can use trading journal technology and platforms such as what I personally use, which is Edgewonk. Now, if you follow the 5 steps I've mentioned above, I guarantee you're going to stop blowing trading accounts. Like any cut, the first thing you should be doing is stopping the bleeding before you start to fix the issue. And by following these 5 steps I've outlined above, you're going to stop the bleeding, you're going to stop the amount of money that you're losing, and therefore be able to create the right momentum to start creating sustainable profits in the long term. Now, thank you so much for tuning in, guys. If you do have any questions, please feel free to comment down below. If you have any horror stories that you'd like to talk about in regards to blowing accounts in the past, let me know. I'm going to write one down below as well. But thank you so much for tuning in. I really look forward to seeing you next time.